Wednesday, that's right, tomorrow, they're going to cut rates, the Fed rate, in hopes the 10-year Treasury yield will drop. Now, the reason that they want that 10-year Treasury yield to drop, one of the main reasons why Trump's been on Powell to push the Fed rate down, to push the 10-year down, because we can no longer get China, Japan, and the UK, our biggest lenders, to come in and buy our debt. They're buying gold instead. And so Trump has been forced to go and borrow money 1 month to 12 months at a time, called T-bills. That's bad because it's very inflationary. It's not good for the economy. So Trump is really hoping they cut rates, the short-term rate, and a 10-year Treasury yield will drop, because he's got to get back to where he can convince our lenders to lend us long-term, or we're going to be in trouble. Now, I don't think it's going to happen, and I told you why. First, take a look at this chart right here. This goes back to last year, September 17, 2024. If you recall, they cut rates, the Fed rate, by 50 basis points. But what happened? Instead of the 10-year Treasury yield coming down, it went up. And the reason why it went up, and also, by the way, if this happens tomorrow, the stock market also went up that day. They were celebrating that it didn't work. Traders were celebrating because the traders knew there was just too much inflation. The traders knew that inflation remained above the Fed's target in 2024. They also knew a rate cut of just 50 basis points was not enough to stimulate the economy. They also knew that the deficits keep climbing because our Congress will not cut. They will not cut important spending. And this was a year ago. And that's why the bond market revolted and the yields went higher. And by the way, the stock market went up 9%. Can the same thing happen tomorrow? Sure, because three things are worse today than they were then. Back in September 2024, they've all gotten worse. But also something else is happening. They keep telling us how great everything is. The economy's strong, consumers strong, jobs are strong. Then why the hell is it? What are you, nuts? The banks have losses of $600 billion. That's 6 times greater than what caused the 2008 crash. 6 times greater. What are you, nuts? Now, what they have done, they've made sure they didn't sell those losses, because if they sell the losses, they have to show, again, record the losses on their financial statements. But they hold the losses, keep them on their statements, don't sell them, then they don't have to report their losses, so their financial statements look better. But this is a big problem, and here's what really gets me grumpy. Why is it, if the economy's so good, like they say, and the labor market's so good, why in the hell are we doing repos? Now, remember, in 2008, we didn't bail out the banks with repurchase agreements. That's why the market crashed 40%. Now what they're doing is they're going in and doing repo agreements. Well, wait a minute, I thought you told us the economy's good, so why are we doing repo agreements for these banks? See, again, a lie. A repo agreement is simple. All they do is go to the bank. First, they have Powell goes to the Treasury, he has Treasury print money, gives it to Powell. Powell goes to the banks and says to the banks, I'm going to buy your Treasuries. I'm going to buy your mortgage-backed securities. Now you got money. But you got to buy this stuff back and buy your Treasuries back, and you got to buy them at a higher rate than I bought them at. You got to promise me you're going to do that. Wait a minute. What are you, nuts? Who's going to hold the bank's feet to the fire? The Federal Reserve, who control the banks themselves? So what if they don't pay them back? And that's a high probability. Remember, the rating of our ratings have gone down. So Powell, during the first 4 weeks of December, the first 4 weeks since November to where we are today, those 4 weeks, remember what he's done. He's already printed $35 billion for repos. Do you know what that tells you? When you're doing that's telling you your economy, your capital markets are in trouble. They're under great stress, but nobody's talking about it. So let's do this. Take a look at this. So look at it. When they tell you how great the economy is, then why is it the 18-wheelers that they sold in 90 days, 18-wheelers, the truck division. Now, the 18-wheelers are the big 38,000-pound trucks. Those are the ones that carry freight from coast to coast, oil, everything else. Do you realize sales of those trucks have dropped 47%, I think 47%, 40 to 47% in 90 days? The only time we've ever seen that was during a recession. So when you hear how great the economy's doing, that means that those trucks, remember, carry all our construction material, carry all our freight. Restaurants have gone out of business, right? And remember, these trucks carry all the food, and construction is down huge. And it's telling you that construction, manufacturing, restaurants, all are down because these trucks aren't being built. They dropped over 40%. That's insane to say the economy's doing well and the labor market's doing well. What are you, nuts? The lying is incredible. So that's why you got to learn how to go long when you buy a stock, but you got to learn how to sell short. So when the market does correct, you're making money. Now, here's the interesting thing, just to take a couple minutes. If you look at the market, what they do to you is this, just so you know. If the market starts to tank, all of the folks who are buying stocks on these dips, they're getting clobbered. When a stock is going up, like we see right here, right? When a stock is going up, what happens? They tell you they have all big buys, buys, right? All the way up, buys. Let me see if I can get this pin to work. I think it's got to get reset. Okay, but on the way up, it's buy, right? Buy recommendation. And that's where you should be buying on your dips. When you dip on an uptrend, when your trend is going up, you buy in the dips. But why do they, like they did with Enron, when the stock starts to collapse and go this way, a downtrend, why do they keep the buy recommendations? Why in the hell don't they bring it to a sell recommendation? Because they're going to use you, the retail customer, to keep the market up so that all the big brokerage houses, Goldman Sachs, Morgan Stanley, Citigroup, can get their pension funds out, their big clients out. They need you to hold that market up. So they don't change it to a sell recommendation. They keep a buy recommendation. And then they tell you buy in a dip, cost average down. All you're doing is being the sucker, holding up the market for the big brokerage houses to get their big pension clients out, like the police and the steel workers and the union workers, to get them out. And then when they finally get down to the bottom and they got everybody out, then they pull the pin, they get out, and all of a sudden the market crashes, the stock collapses. And then what do? You think they would change it then to going back up to a buy? No, what they do at the very end is they change it from a buy to a sell to scare anybody that may be left behind. Think, oh, I'll buy now at the bottom. No, they scare them out, and they put in a sell order at the end. And then on the way, they do that to scare anybody that's left out so they can go back in and buy and know comfortably there's nobody left. And then they keep that sell recommendation on the way up, about halfway up. Then they'll change it to a buy. So please stop. Tomorrow, if the market starts going down, don't buy on dips, on downtrends. You'll get killed. philsgang.com. Check us out. Free for 10 days.